What's going on, everybody? We've got an amazing episode of the Day Trading Show for you today. We got Anthony Crudele here in the studio, well, the virtual studio. We're talking all about overcoming setbacks, how he bounced back from some major failures, how he's dug himself back out of drawdown. We also talk about his mentors and what he's learned from the current market environment, how he's navigating the current market environment. You guys are going to find a ton of value. You're going to have to stick through. It's a longer episode, but there's a ton of value in it. So phones off, trading platforms down. Enjoy the episode. All right, everybody, welcome back. We've got another amazing episode today. We've got Anthony Crudele on the show. Anthony, thank you for being here again. We are really excited to talk to you. We don't want to talk about too much of what you've spoken about on other interviews or what you religiously talk about, in your show or in the regular write-ups. We really want to get into some substance with you today. So again, we appreciate you being here. James, do you want to kind of kick us off a little bit? I know you had some interesting questions to start the ball here with Anthony, and then we'll kind of roll in. And even as we get into this, Anthony, I took questions from social media. So we're going to get into that towards the end of the conversation too.
Cool.
Sure. Yeah, 100%. So, obviously, today is obviously Monday, the 13th of June that we're filming this right now, and markets have just been tanking off quite a lot today. I know Bitcoin was down over 10%. The indices were down, pretty much over 2% over the S&P, the NASDAQ, and the Dow Jones. Kind of just to kick off the show, how have you been handling recent market conditions, and what are kind of your strategies that you look for in the volatility that we're seeing right now?
Well, I actually tweeted about this, I think, just the last week. I just finally got out of a drawdown. I had just a handful of bad decision days, not even only a few bad undisciplined days that caused me to be in a drawdown for 5 weeks. And I finally just got out of that drawdown. I'm actually not entirely out of it because I lost actually on Friday and today, but I kept it small enough to where it's not that big of a deal. But ultimately, it's a tough environment. It's a tough environment because the bear markets I've traded in the past, and I had actually my best years in bear markets, they were just so much quicker to the downside. They were not like this slow drip, almost like a reverse bull market where we're just grinding lower. And I feel that it's just been very difficult for me to make money on the short side. And I know that's probably crazy for some to say. We'll say it's Anthony, it's going down all the time. But as a shorter term trader, it's just not been really that easy. And so how I've really just been adjusting to it is ultimately just picking one side of the market off the open. I talk a lot about really how I like to use the anchored VWAP in the 3-minute opening range. And I just see how that looks. And then relative to that, if I have something on the bigger picture that tells me to be long or short, if it's coinciding with it, then I'll potentially trade aggressively to that direction. And if it doesn't, then I'll either stay away or I'll trade really small. And I think just overall lately, I've been trading smaller because every time I seem to add or get big in this market for me, it just seems like they're just squeezing me, short or long. So, ultimately, I've just been trading smaller and really just trying to focus on one side of the market. Because as you guys know, you guys are intraday traders too. You can get twisted and turned around. You can come in on a day where we go down all day and you can lose money trying to sell the market because the rips are so high. And you could make a ton of money by being long in the day where the market just seems to go down all day, because when you go back and look at the chart, there was good rallies to catch. So I would say the number one thing is focusing on one side and committing to it unless the theme changes. Just stay with it and not overtrade and get myself caught up.
That's such a good answer. We use an indicator called a TDI. It has a market sentiment line. And I think that James will tell you that is something we look at first thing in the morning. What bias are we going to have today? If there's a swapping market sentiment line where bias is indecisive, we actually will kind of turn away from that and try to find where is the bias most clear. Okay, we've got a good market sentiment here. What do the higher time frames say? Oh, they're in the same bias. Okay, now we're starting to get multiple confirmations that we want to be short biased. And then it's like you said, waiting for your signals, whether it's a VWAP or whatever entry signal you're looking for. I think having that bias is huge. But when you come out of a drawdown after 5 weeks, Anthony, what I guess is the focus now back to the point of, okay, the mistakes that I made, we've addressed them. We're going to not repeat them. I'm sure you've probably spent many minutes and hours thinking about them. How are you not repeating those mistakes specifically that you made that caused you to get into the drawdown?
Well, my mistakes were just not, so I should say this. The first thing I always look at when I go into a drawdown, is it me? Is it the market environment, or is it my strategy? Because I think a lot of people don't know why they're in a drawdown.
Sure.
So they'll say, it's my strategy sucks, so let
Yeah.
me find a new strategy.
Yeah.
Oh, this market's terrible.
Yeah.
Or a lot of people don't look in the mirror and say, I just not trading well.
Right.
So for me, I identified that the problem was, for me, oversizing in moments that I should have been taking part of my positions off. So I got really aggressive with my adding, and it just blew up in my face. Next thing you know, you're kind of like sitting there going, man, they just freaking run me over. And, we always talk about managing risk, and that's great, but I made a lot of my money by being aggressive and identifying times. I got undisciplined and I identified poor times, and it blew up in my face. So then I had to go back, take my risk per day down, take my risk per trade down, and just be able to go back to trading smaller and just get control of my decision-making. So now I'm back in control of my decision-making. So I know where I'm at, and I know that when times are making sense to me to add, to just be a little bit more methodical about it and not just be this crazy aggressor. Wait to see what happens. Friday I actually made a mistake, and I caught myself doing it. I caught one little bump on a rally, and then I said, you know what? I doubled my position right away, and it just turned right back against me, but I burned out of it right away. And I said, you know what, man, you're doing this. This is stupid again. You just got to take that little bit of a winner. So it's about lowering my expectations and really being smart. For me, my mistakes have been position sizing, just too big and bad areas. And just, like I said, being back in control of your decision-making.
How does the fundamental bias play into that, though? If you asked me, like when we sit down to trade right now, it's much easier to be shorting things. Were you looking to buy things in rallies because you were having more trouble to the downside? Then you ended up making money in some of these buys and then adding in, and that was kind of like the situation you just described? Or and I guess another way I would ask that question is, why aren't you really just looking for shorts? Is it because it's been difficult for you in the past couple of weeks?
Why am I not? Well, after Friday's move, I'm only looking at shorts,
right.
And prior to Friday, I would say I didn't have the clear view that we're going to go and take out the lows. And we'll talk mostly about NASDAQ here. That's a market I trade a lot.
Yeah.
And so I would love to say that I knew that was going to happen. You had the CPI print that came out hot, and, everyone's talking about the Fed going to be more aggressive with raising rates.
Sure.
So obviously when I looked at the yields, on the 2, 5, 10, and 30 year, you see that they're just going up. So it tells me only to look at short. So yeah, that fundamental aspect comes into play where you're like, okay, this supersedes my indicator. But prior to that, we had somewhat of a contained area where I felt we'd be a two-way trade. So I was trading both sides. So going back to what was I doing on the open, you get a little bullish indicator, and we did have a little bit of a run, and I thought we'd just probably chop around before CPI and really before FOMC. So when you look at just this past recent environment, I look at it and said, I can't be scared to be long or short here, because once again, I didn't have the clear view that I do now. I mean, obviously Friday and today, the market's getting buried, right, and it's because of that. But once we get to this point, now I'm saying, okay, like this morning, I just took a couple of shorts. And to be honest with you, I got a weak hand in the market again right now, because in my stuff, we're breaking out, and it's like I want to be short, and I just see them that they're holding and bouncing. I'm not looking I don't have really a big target down below right now, because when you look at it, look what's happened in ETH, in Bitcoin. It's like it's easy to look and say the NASDAQ's just going to keep tanking here. I don't know that. I mean, I think it's going to keep going down, but I just got a weak hand right now. I'm not going to lie. So when I'm short, if it's not going my way right away, I'm burning out for a small loss. I'll get back in. So I think a lot of the question you were asking me was like, how does the fundamentals fit in? Yeah. Right now, we're in this fundamentals are superseding technicals, and the technicals are actually coinciding with the fundamentals now. But it's not an easy trade when we're breaking out and you've got all this news going on, and one mistake, it burns up your day.
Right.
So it's, kind of a long way around that question. But
No, that is a good answer. Have you modified the way that because you've talked about how you've adapted in the sense of like position sizing, selectivity. You've touched on that a little bit. Have you changed your profit taking on your winners at all? Are you taking profit sooner, taking profit later?
Well, yeah, that's a great question. So one thing that I do is when we're in trend and like we are right now, let's say you want to be short and it's going down. Mm-hmm. I really shrink up my trail stop scenarios because I look at it like this. Either they're going to keep going or I don't want to be caught covering on the high tick, because that's what's going to happen because I'm going to try and hold them. So what I do is I'm very quick on trailing. My entries are small, but still contract size enough for me to do scaling. So what I try to do is I just try to rotate out of a position. We'll just use a 10 lot, for example, because it's just an easy number. The minute I get into, let's just say 10, I start to rotate out of them pretty quick, and I try to leave a trailer. Yeah. But I get really tight with that trailer. And I said I have a weak hand. So what I'll do is I'll use something as simple as, a 5-period moving average on a 3-minute chart, which may seem like, wow, that's just really super short term. But I'd like these moves can become really one-dimensional.
For sure.
But the same with the blips back up. And I look at it and like, even though today we opened up, got below my VWAP, and I looked at all that stuff and said, okay, it still was not a really clean trade. So I'm trying to keep it tight. And so when one does run, I'm just going to hold it. See, people always talk about, well, how do you hold winners longer? Well, for me, the only way I've ever been able to hold a winner longer is never in a full position. That's just, unless I just bought them or sold them, they just rip through and it's like, okay, great. Most of the time I hold them is because I got small quick. I took some money and now I just go, I'm not getting out.
But that's it. That is so well said. That's me today in Euro AUD. I took 75% of my position off at 1R, risk 25. I'm up 25, 27. Bag about 75% of the position, lock the stop. The rest is risk-free. I have had those trades, as you have, I'm sure, where you take the position. Especially on Bitcoin or an index like NASDAQ, it'll just move on you sometimes, and it's fantastic. But majority of those big winners where you've seen you or me in a trade, that's so funny that you do it the same way, but it makes sense. It should show everybody listening, like, good risk management. Yes, it can be modified, but it leaves the same kind of clues. Like you're taking risk off the table, you're taking gains off the table. That's part of good risk management,
Yeah, looking at the 10 lot, I might make a little bit on 6 or 7 and make a lot on 2 or 3 or 4.
Right.
And for me, the reason why I've always traded like that is because I could never perfectly predict where the move will start and where the move will stop.
Yep.
I embrace that.
Yep.
So the only way for me to do it is to find an area I like, get as many on as I'm comfortable with within my risk parameter, rotate out of some of them, and just try and hold something.
Right, because you have your bias, right? You have your direction, and then you're waiting for the market to give you the timing. Trading is direction and timing. And if you try to predict timing all the time, you're going to get smoked. You've got to just get in the direction and have good stop losses in place. Do you use a stop loss in all your trades?
I always have a stop loss, whether I always put it in. I'll manually click out, like, especially if something's rotating my way. Like I won't put something just above a moving average just to get kicked out. I'll just watch how it reacts to it. I'll use different tools. Majority of the time right now, I am going to, when we are trending in any sort of direction, I think just to provide some clarity is what I'm looking at. How I'm using a trailer is if I use a 3-minute chart and I have a 3-minute Bollinger Band. If the market's going in a direction and the mouth of that Bollinger Band is open, like a mouth, I just stay with it as much as I can. And I'll use, like I said, if they're really starting to burn to one direction, I might go to a 5-period moving average, simple. But a majority of the time I'm using a 10-period moving average on a 3-minute chart. And like I said, I'll adjust it based upon the volatility of the day and just what I'm looking at. And sometimes I just feel like if it's really starting to come off really hard and I've caught a big winner, I might shrink that moving average down to say, look, you don't want to give back this much now. But initially I might be at a 10 period moving average. And as it's just starting to go down, I just watch to see how that's trading. And once that mouth of that Bollinger Band closes on that 3-minute, I'll really watch that moving average, and I'll watch those Bollinger Bands and say, look, I feel like we're consolidating here. Or I'll look other places and say, what's the S&P doing? What's the Russell doing? Are the treasuries still making new highs? Then maybe I'll say, you know what, I'm going to give this here. Now, this is talking about trailing stops. My initial hard stop, if it's gotten my way, I don't need to work it all the way up there. Like some people feel the need to do that, or they'll put them to break even. I personally don't do that. because when I want to be out, I get out. I don't have that hesitation in my body. I'm just gone.
I think that's like,
if my stop
James
is
is just
ways
like that.
away.
Yeah.
If my stop is way up there, I don't need to manually put that in there.
Right.
I'm watching the action close enough to just, I'm going to get out.
Sure. Absolutely.
Anthony,
James,
so I was going to say, Anthony, you sound like you trade very, very similar to me, actually. So I'm also pretty aggressive. So I'm from one of your tweets about, I think it was end of December, about choosing one side of the market. So I'm literally now only scalping one of the systems that Austin taught me in his course when I joined 3 years ago. So I'm choosing one side of the market and scalping in that direction on the 1 minute chart using exponential moving averages. So this was, it's great to see that you're rotating out your positions, because I feel that that's especially like what I do. What is your take on when you're getting out of your positions early and sometimes you're leaving profits on the table? Because obviously you got a trade-off. You're bagging profits on the short term, but you might miss the longer term move. What is your take on leaving profits on the table, and how do you go about that mindset of that?
At this point of my career, I don't really care about that. I mean, I know that sounds like, well, he doesn't care about making more money. That's really not the case. The case is like, I look at it and say, I can't even talk about how many moves I've missed. So when you've missed so many, it's like, at some point you're like, I don't know what to say about it. Yeah. I mean, I would love to tell you the other day when I was short on Friday, where I lost money on a couple of those trades, that I still had that short. But my mind, and I think that this is something that, I mean, I know, James, you're an athlete,
Yep.
And I know, Austin, you're very athletic as well. And I know that you guys both have athletic minds. Michael Jordan says that your best shot is going to be your next shot. I forget exactly how it's worded. Mm-hmm. You look at the Tom Brady's of the world. You look at the Tiger Woods. Why is Tiger Woods so able to focus on the putt that's in front of him? It's because it's the only thing that matters to him. He's missed a million putts. I've seen him miss 3-footers. You're like, how could he do that? That could have cost him the tournament. But if he focuses on that, then he can never make the next 3-foot putt. So in my mind, I can't allow myself to dwell on any sort of missed opportunity, because there's always missed opportunity in this market. And if I catch something that's good, I've made money on trades that I thought were complete garbage, where I'm like, I'm going to buy these here. I kind of like them, but if they don't work, I'm not going to keep them. And just boom, they just go my way. That's a gift. You get rewarded in a different way by being disciplined, right? Yeah. And if all of a sudden I'm chasing a profit, all I'm going to do is create a bad habit, and it's going to hurt me down the road. Yep. So I really mentally block it out.
It's a great answer. It was very well said. I think that a lot of people get to that point in their career where they go, look, I have to stop stressing out about the fact that I made, let's say, 2R on the trade, took most of my profit and got stopped in profit. That's a big thing that we come across, Anthony, and guys that like work with us and stuff, is people always are asking, should I take the full profit at 2R or 1R? Or should I lock my stop and leave some and let it run? And I always default back, of course, to say we should be back testing and looking at the data of how does that perform? What is the outcome in those two different scenarios? And that can be, but when we've done some testing in some of the strategies that we've tried this with, the outcome is very similar. So I've always defaulted back to being like you said, the psychological side is so important. Winning trades, I think, too, keeps you confident, keeps you performing better than if you're to let winning trades especially turn into losing trades. I took a quote from Peter Brandt and I use it all the time. He said, never have popcorn trades. So I'm curious to know, is risk management something that you're thinking about when you are up in the trade at 1R, 2R, and that's why you're going to trail the stop and always be getting out, right? That's basically what it is. You can't let a winner that's up 3R, 4R turn into a loser, right?
I'd love to say that I never do that, but I still do that. It's going to depend on the environment. I think this is the one thing I would.
Is that a swing trade though?
Well, all my trades are intraday to swing trades. I really try to just trade around one side of the market. Okay. Kind of like what Bruce is talking about. He's just like, or James, talking about rotating out of one direction. So I'll stay with a position around a direction as much as I can. Okay. And what was the question? I just want to make sure I answered it.
I was saying absolutely. When you are up 3, 4, 5R in a trade, you said sometimes you do let those turn into losers. So does that still, I mean, of course, over time it's kept you profitable, but have you ever thought about not doing that? Because something that I've just been big on is if I'm risking 10 and I'm up 30, I can't lose. Like there's no reason to lose this trade at this point. I should be mitigating risk and not letting this go red on me.
I would say that it rarely happens to me,
Okay.
but I will say to you that there are times where I've looked at situations and said, this could be a wider swing time scenario to where maybe I don't lose, but I give back all of the trade. I mean, it's
is that in the attempt of then getting potential more gains if that swing was to turn into what you thought it would be. So it's really based on the context of the time frame of the trade that you're taking.
Yes. And I also think you look at it like this, it's like a perfect example would be something like, let's just say you sold Friday's close,
Sure.
right?
Yeah.
I mean, I didn't, and it just runs today in the NASI and you're looking at it and you're like, you could have all the reason in the world maybe to cover here because you got it, but maybe that's your trailer. I might say to myself, this thing could go, who knows where. Mouth Bollinger Bands are open. I don't know when that rally is going to come. So I might step back and say, I ask myself a question. What's going to bother me more? Covering this here and it goes 1,000 points more, or it comes all the way back. Now, mind you, I'm never going to say that I'm the perfect risk manager because there are times that I will take on risk that maybe doesn't seem perfectly appropriate or sound great on Twitter or Instagram, but I will do things like that because I look at it and say, I feel like I got it right. So I have the belief in myself and I look at things and I say, this has happened to me before. Now, mind you, I don't even look at 2, 3, 4, 5R. I don't even know how much. I just look at the context of where we are right now. And I say, do I want to buy this here? Do I have a reason to buy this here? If I'm short, we talk about Friday's close. If I don't, then I won't. Now, I've already taken some profit or some of that risk off, but I look at the market and I say, what would you do here? I ask myself these questions, these psychological things, right? And that will go beyond the technicals because at this point, like I said, you could be breaking out to who knows where. Look at it. Imagine if you were short ETH at 1,800. I was actually short futures just above there because I was long spot ETH. I covered my futures and I covered my spot. I could have, I look back at it and say, if y'all would have sold into that break, would I be covering anywhere in there? And that whole way down, you look at the chart, it could go to 800,
right,
or lower.
Right.
So those are the times where you're something's happening in the context of the situation, and you say to yourself, "This is worth it for me to hold it." I might get it back.
That's what that is. For everybody listening, like Anthony is speaking experience, years and years of being in the market. That's where he's gained. And I think, correct me if I'm wrong here as well, Anthony, you have a very discretionary approach to trading. And that's got to be all the way back to when you started trading in Chicago. It was very discretionary then versus how you can be so systematic now to the point where you can program it into an algorithm and it runs like a robot. You know what I'm saying? It can be extremely systematic. I think I sit somewhere more in the middle, but you're very discretionary. So how do you balance discretionary discretionary analysis, discretionary actions with technical rules, systematic approach to trading? Do you try to balance them or do you just trust the gut?
I will say this, that my approach is I'm a discretionary trader, but my process is systematic. And when you do something enough, it becomes automatic. Yeah. And one thing that experience allows you to do is to step back from a situation and actually look at it from further away and say, what's happening here? Because I've seen bear markets, bull markets, consolidating markets. You look at a situation, and if sometimes you get a trade on that you didn't know would be a high or a low, because you never know till way later, and you look at it and say, this is something that's worth it for me to hold. I caught a big part of the bull market in areas that I thought I bought were very not good. And they just started going my way. And I looked at it and I said, I didn't think that was any good, but now I look at it and go, that could be pretty good. And why would I cover it? And eventually you get out, but have they come all the way back and you're like, well, that was just a stupid ass idea. Yeah. But I look at it like this, and I'm built like this. Traders make money in moments. Your experience gives you the opportunity to seize moments. And certain times you're going to see things that everything is very clear to you. And to me, you have to follow that. You have to pursue that what you see and fail at it if it doesn't work in order to have better experience down the road to execute a similar situation. Because what happens is you'll come into times where you're like, oh, I should have done that. Why didn't I do that? See, I'm somebody who just lives very much in like, I ask myself the questions. What would I rather be? What would I be more pissed about? What's the environment telling me? You got to keep this trade, man. You know, I did it the other day. I was actually long Facebook calls.
Okay.
I was talking with my buddy and I said, I like where I bought these. They came all the way back. And I bought them. They just ran on me. I said, okay. And I don't trade a ton of options and stocks, but I liked the area. I saw it was building. I had some things that made sense to me. That thing just came back with a vengeance. And the calls were actually lower. Because you guys know, if you traded options before, you're like, man, I bought these calls when we were at like 196, but all of a sudden we're back to like 199 and I'm losing on them. You know, It wasn't exactly how that happened, but it was pretty close to it. And so I was like, okay, I just got to dump them now. But I had a big run on those. But when I looked at it, I'm like, they're above all my anchored VWAPs, or they're starting to rotate out. Bollinger Band was getting closed up. It looked like they made that low for me. I kept it. Experience told me to keep that because it had massive opportunity. Did I lose money on the trade? No, I broke even pretty much on it. Right. But at that moment, I made a choice.
Sure.
And if I didn't make that choice, I would have looked back and it probably created a bad habit down the road, because next time, maybe I hold it just because I feel like I should hold it versus looking at the situation and saying, you should hold it here.
100%. I was just going to say that. So that stems me into my next question perfectly. What lessons are you taking from this current market condition? Because like you said, you've been through a lot of bull markets, been through a lot of bear markets. You've been through the bull rallies in the bear market. What lessons do you take specifically from what we've gone through, I would say from January till now, this entire year so far?
What this year has taught me that I feel has been different in the past is, number one, bear markets aren't always by definition the way that they've been in the past, meaning like basically every bear market is typically quick. Look at COVID, look at 08, look at 01, 2000. They're very fast, they're sharp, and a lot of times they're V bottoms. So everyone's trained to look for a V bottom, and therefore you get a lot of people picking bottoms because they're looking for a V bottom because the rallies have been so fierce.
Yep.
Not all bear markets are going to be fast to the downside, although this has been relatively fast when you look at how much percentage we're lower. But the bleed lower has taught me that it could happen in a different way. A low can happen in a different way. And even though I do know that, I, like all of you, have been trained to look for V bottoms. Look at COVID, the big FOMO of not buying that dip. Let's face it, I did great on that break in COVID. And then when it started to rally, I kept getting short. Next thing you know, I'm just getting blown up and giving back half of my gains, if not more, because I didn't recognize that the low was already in. In this, I think that because a lot of people did that, what I did is you just keep trying to buy the dip and you just keep getting killed. So I've learned that if I'm going to be long, I'm going to be, especially if I'm buying an area that I just feel is like, okay, I'm going to be really small, or I just have to stay away from it. And when they finally start to hold and they start to go up, don't be aggressive with an add with the long, rotate out of it, keep a small trailer and just take your money. Because even if you miss that big rally, so what? Then at least you know a low is formed and then you could build from there. I think that's what this bear market's teaching a lot of people, is that, look, we may not end the way we've ended it in the past. And who knows how long this could go on for. So you've got to reset. And you've got to say, what is really happening? And I think the biggest fear that most people have is, well, I missed most of the break. Maybe that's true. But I'd rather be late now, short in this trend, than trying to pick the bottom and be the sucker who's early on the rally, because that will cost me more.
Yeah. Yeah. I mean, it's fun to be Peter Schiff, always calling the end of the world and calling the top of it and everything. But exactly. You like, if you really ask most people, they'd be like, yeah, Peter Schiff has been wrong way more times than he's been right. So you don't, it's fun. And it's almost like nowadays with social media, because, fear gets clicks, that gets propagated more. But I don't think it is the right perspective. Like you're saying, it's almost like it traps you on the negative side of this trader loop that you should have been in. Whereas instead of getting tapped out on the COVID thing, you could have been doubling back in onto the long side and not trying to right. So you keep mentioning this thing that I don't know if you're familiar with Sang Lucci. He's another options guy on Twitter. He's been around for a while. He said this and it stuck with me. He's like, I know when my market is hot and I slam it, and I know when it's not and I back off. And you've said that in like 5 different ways. So you must agree with that 100%, right?
Yeah.
100%.
I mean, I said traders make money in moments. I mean,
it's it.
My best years have been bear markets. The best year of my career was 2008. I've not yet topped that year.
Yeah.
And that was just because to me, everything, I was at the right age. I was at the right place and time of my life. And I was at the right time when the news hit.
Capitalized properly.
Exactly. I look back at that year. I ended up losing money the next year after my best year. And it was like, how does this even happen? And it was because, I'm not going to get into all of what happened, but when I look at it at that moment, I took so much advantage of that year that bought me time during times where things weren't well. Wow. And it really just always, I go back to that year and just several years of my career where I've really taken advantage of the market. And I say, those are the years I needed to get paid, because next year is not guaranteed that I'm going to get paid at all.
Right.
So I look at it like this: if the market's giving, I have to be taking.
Yeah.
If the market's taking, I have to be giving less. And this is a year for me. And I had a really strong start to the year, great start to the year. I've been giving it back, and it's just been difficult. Mentally, it's not been the easiest thing for me. I've kind of just gotten a little bit out of rhythm, drawdowns back and forth. I'm kind of like, but I keep going back to, I fought myself out of a drawdown. Now I'm sitting here and just like, I feel like strategically, and this, right, James, and in what you've done, sometimes you're just in that little zone where you're kind of like, I can pick them apart, and I feel really good about taking losses on Friday and today. I knew what I did wrong, but at least I'm in control of my decision-making, because all of a sudden there's going to be some moments where all of a sudden I'm going to see it again. And who knows how much I take, but right now I'm not really in a taking mode because I'm not trading well, and the market isn't in a giving mode in my strategy. So I got to be careful.
Yeah, it's like those momentum shifts in sport. You get those momentum shifts, and now it's your time, basically, if you want to analyze it as sport. Yeah. But yeah, I just wanted to ask Anthony. So obviously, also now being on the younger side, and you've gone through a lot of experience. As you were saying, 2008 was your best year. So on Twitter, I think it was in December, you were speaking about Christmas and the holidays and that sort of thing. And you spoke about when you're 21 and you had this anxiety attack or heart attack, and you went through that experience. What are some of the things that you would tell your younger self and guys like my age that are trying to make trading their career and be there for the long run?
First thing I want to say is, Austin, when I was first very impressed about what you did, and I saw you doing, meditation, yoga, and how you remove yourself from just trading. You don't just always talk about it. I see how you take those mental breaks, and I think that you are just so far way ahead of the curve.
Thank you.
Than I was. Obviously, at your age, I don't know how old you are, but I know I can tell you this: it took real hard experiences for me to understand what you understand. So I think that's I commend you for that, and I think that with you being an athlete, James, I think that you already have like this kind of like, this competitive spirit outside of trading. So when you're going out doing stuff, you probably have the really good ability to focus, right? For me, I would say the advice I would give the younger people or the people that are just starting this, because they don't necessarily have to be younger, because I think that trading is one of those things where when you come into it, you're not prepared for what it does to the mind and the body. I don't think you're prepared for it. So you could be 60 years old coming into this and done well in your corporate life the whole time. And all of a sudden you're like, wow, this is like overwhelming me. So I would say for anybody that's new to trading, not just the younger people, is that you have to have true separation. And it has to be very distinct. Like what you're doing and what you're focusing on when you're trading, you can be, I call it basically hyper-focused in this moment. And when you were in those other moments, you have to learn how to remove those thoughts from your mind and be able to be focused on something else, to be able to refresh, to come back, because otherwise you're always constantly carrying this burden. And trading is so difficult because it's something to where it's like, it's hard to let go of mistakes we make, and we make them every day. It's hard to let go of losses, and they come hopefully not every day, but a lot. So in order for you to let go of that and to actually move on, you have to be somewhere else, focused on something else, because that's where the healing comes in. And I didn't get that. I carried everything on my shoulders. I carried every thought, everything I had in my mind as an early 20-year-old trader who was running out of all the money I had saved, which wasn't like it was too long of a time and too big of an amount of money, but it was a lot to me, that I just became overwhelmed by it. And I was like, this This is the only thing I could think about. This is the only thing. And all it did was take me further away from where I needed to be. I am more balanced as a person now, because when I sit down, that market's got 100% of my attention. When I'm with my friends, or I'm playing cards, or I'm playing golf, or I'm with my wife, I'm 100% focused on that. And that took a lot of time for me. And you don't get there without doing what Austin, I think, does extremely well, is that meditation and yoga and things. And just, I think controlling breath would be the one thing I would say to everybody is, if you do nothing, with exercise or anything else, I mean, I personally think you need to do that too. But if you can learn to control your breath and to lower your heartbeat at times when things aren't going great for you, I think that would be of tremendous help to you.
It's great advice. I think, and I appreciate the kind words, Anthony. I think and it comes from experiences that I've been through with my family and my life, where I've seen how quickly life can be taken away from you and why you do need to take care of your body and your mind. Forget trading. If trading's not for you, there's someone listening to this that isn't going to be a trader for the rest of their life. Trading isn't for everybody. You should take care of your body and your body and mind, no matter what. That's always been my feeling. And I think that it's translated really well into trading. Like for me, I have 3 things I do in the morning before I trade. I meditate for 10 minutes. I do 50 push-ups, and I drink this warm water with lemon and salt in it. It's a yoga thing. Those 3 things are like my non-negotiables, because if I show up and I try to trade without doing those 3 things, just look at my data. It doesn't look good. I do stupid trades. I give back money in the afternoons. But if I just do those 3 things, the rest of the day seems to go super well. And it's like you said, science. There's medical benefits. Real stuff is happening when you meditate and when you go for a walk and do physical activity. So I think that often people get caught up in the sauce of trading, and they're thinking that the answer is in here on that candlestick or whatever it is, but it's not. I think at some point, and it can come very quickly now because there's so much education out there, you can get to the point of, hey, this is a winning strategy. I got to get right in here. So I was curious to know, Anthony, who were your mentors? Of course, back on the exchange, you had mentors at the pit, but like now, maybe more recently, last 10, 20 years, like who has been a mentor to you? And it's okay if it's outside of trading. I think people are just curious to know, who do you look to for guidance or for inspiration?
So, well, first I want to comment real quick,
please,
on what you said about what you do before the open.
Yeah.
And I think it's such an important point.
Yeah.
Is that you get your mind set. You do something to ease into the day. You show control. You show, to me, that I ease my way into that morning. I can't think of the words I'm trying to look for here, but you basically get yourself in a calm state of mind by doing something that's part of a routine.
Yeah. So
when you go to trade, you are at that level.
Yeah.
I think that's extremely important. And I think that anybody who wants to just get better at trading is do something before the open that helps relax you. I read every morning before the open because it makes me focus on the words. And if I can't be focused on the words,
you should not be trading. Right. So it just gets that focus in play for you. And then it's like, I'm primed to try to be my best self now,
Exactly. It's such an important point. That's why I just wanted to mention that, because I think that was really great that you do that, and it sets the tone. Getting back to my mentors. So, I look at mentors in a couple of different ways. One is I look at other traders and I look at all of them as I can learn from them. I am somebody who's very open to learning from someone who's been trading for a short period of time or someone who's been trading for a long period of time. I think all trader feedback is of value to another trader if they allow themselves to listen. I think that too many people think that they're too good or too smart at this business, and they don't listen to what may be working for someone else. And I have learned that what I'm doing today and my strategy may not be doing what I'm doing tomorrow. And if I don't listen to what other people are doing and their successes or their journeys, I'm not really open to learning and getting better as a trader. So I always am. I love listening to what other traders are doing. And I look at that in a way as they are a mentor to me of sorts.
Yeah.
Meaning just because I like to listen to what they say. I hold every trader out there in high regard that does this, and I respect them because I know how difficult it is. So I think that listening to them is extremely important.
Remaining open-minded. You're very open-minded.
I have, look, I'm okay with, I'm okay with not knowing everything, right? I mean,
Right.
I look at this and go, what do I know, right? I only know from my experience, and I've learned so much from other traders, whether they've been trading for 6 months or 16 years, doesn't matter. I've learned different things. The other way I look at mentors is I'm at the phase of my life where I'm in my mid 40s, and I look around and I look at the guys who have been successful, that are in their mid 60s or older, and I look at them and say, what did they do to sustain success? Because one of the most difficult things for me to comprehend was that I had really struggled to get any form of success. Now, I think success is going to be different for everybody, but for me, making enough money to do this for a living, that was a challenge, right? It took me years. Then I achieved that. Then I learned that I made a little bit of money, didn't have as much money as I really thought, right? Because when things weren't really going well, I was struggling to sustain a level of success. And all of a sudden, I'm like, whoa, what do I do now? Now, all of a sudden, I have to be a smaller trader. I have to have a lesser car. I have to have a smaller house. Doesn't, right? I learned that, and then you get back to, okay, I've stabilized again. Now you get to my age and you still making money, doing things, and you look and go, how do I sustain this 25, 30, 40 years from now? So I look to those guys and I say, what are you doing to sustain success? And the one thing I look at all of them is like, as you get older, I think when you get into your 40s, and it took me this long, maybe for some of you be quicker, you finally just start to just slow things down and be able to make better decisions financially. And you're not quick to make quick decisions in anything in your life. And you start to look how to really take advantage of some of the money you've made and put it in different places and do things to have something where you grow, and not solely dependent on you pointing and clicking the next day. Because to me, that's so much pressure on us. And I know, James, you're a younger trader. Austin, you as well. You guys, you don't have, or you have this right now where you look at trading and you say to yourself, this is all I want to do. This is where I'm going to make my money. I get it. And at some point, who knows what happens in your life? And you say, what happens if I can't click that button? Or what do I do to sustain it if I don't, if things don't work out for me for periods of time? So what do I do to stay in business? So I start thinking about that. And I look at some of my friends that have owned businesses and done things. And I would say the majority of them, what I've learned from them is that they're able to slow things down. They don't make rash decisions. They don't get away from what they've done to make money. And when they make money, they stay very true to what has made them money and keep kind of pressing those winners. And they're very cautious and smart about where they put or do other things in order to be able to grow wealth. Because that to me is where I feel like a lot of the mentors I have now, I'm learning a lot from that aspect of my life.
We need for more context about the growing wealth. Do you mean taking specifically profits from trading and investing them in something that holds value or gains value?
Yeah, I mean, just what do you do with the money that you make to where you're not just growing your account, you're growing your overall wealth as a person? If you start to make money as a trader, the mistake I made was, well, I'm just going to keep trading more. I'm going to keep trading bigger. And I just think that that's just the way to go. And you get to a point where all of a sudden there's nothing else that's working for a period of time. And you're still trading big and you start giving back chunks of money. And then now you can't save the money that you should have been saving, and potentially have other revenues of income. See, I'm a big believer that trading is something that you're going to have times in your life where either it's going to grow out of your interest or maybe you're not trading well. What do you do to sustain the money you've made? What do you do to grow your income? So I don't think about when I'm trading. My trading account is my trading account. But how do I grow myself into that next level of wealth is the way I look at it. Because a lot of traders I've seen make a great deal of money. And because things don't work out for them for a period of time, they give it all back. And they don't know, they don't see any other path.
Right.
So I think that's a big mistake.
It's like the guy who, it's like Brett Favre coming out of retirement 3 times, right? Not going out. It's like Tom Brady right now, not just going out on top, coming back into the game when maybe you should have just stayed out of the game. right? That might be a good analogy for it.
I look at it like this. It's like you look at Tom Brady, look how much he's expanded his brand, what he did with his money outside of it, because not every trader is going to make millions of dollars, right? Tens of millions of dollars, whatever it is your goals are. But along the way, if you're making money, you need to be able to sustain you to stay in that position. And what do you do to be able to do that?
Yep.
Because I've been taken out of this business so many times to where you're like, how do I sustain success? And you do that by not just trying to trade more and to trade bigger, but when you're doing well, you take your money out and you're smart with your money.
Yeah.
Because it allows you the times where things are not that good to withstand it. And then when it gets good again, you're still there in a position of power.
Survive.
I guess that's really what I'm trying to say. Is like, you got to find a way to sustain your success in this business.
James, did you see recently Tiger Woods got on the billionaire list? Yeah. Only 10% of his earnings come from golf.
From golf. Yeah, I saw
That's
that.
the better analogy.
So Anthony, I love what you just said now, because my dad is a chartered accountant here with his own business in South Africa. And so is my girlfriend's dad, actually, funny enough, also a chartered accountant with his own business here in South Africa. And they've always told me, when I got into trading as a career, and I've been doing this now, this is my second year full time, third year, if you want to talk about it, but officially second year full time. They've always been saying to me, I'm making good money for my age, but be putting it into places elsewhere for you. And if you want to give me advice, and for other young traders like my age, what would you be looking to get into? What other sources of where's other great places to build wealth outside of trading?
I go back to staying real to who you are as a person. So like, I look at it like this. I would say, what are your passions, and what are something that you could put your money in, even if it's a small amount, and to be able to invest, whether it's I've invested a little bit into some businesses. I have, just really lived well below my means after a period of time as well. So you learn also like how to adjust what you're spending, I think is a big part of it.
Of course.
What you really need versus, what you want.
Actually,
I think that when you look at what you do for that investment, I think that it's got to be something that you passion, that also I think will help you with your trading, in the sense of you go somewhere else and do something, and for those moments, kind of like what we talked about with Austin with meditation.
Sure.
So I've invested in other things and other projects. Sometimes they're projects. Sometimes there are other things within trading where, I've backed traders in the past, not always a very successful business for me, but I've done things like that to kind of, look at things from that perspective, and to try and find a way to really just be a businessman. Look, I've done, with the podcasting, I will tell you I've done that. Yep. That all stemmed from me having a heart attack and me being like, am I ever going to be able to trade again? So sure. I started doing podcasting, I was doing media, and that's one aspect of what I would call my total business and what I do. And I look at it and say, I allow myself to, when I am trading, that is my focus. But if I feel that I shouldn't be trading, I allow myself to stay in business and sustain a level of success without putting so much pressure to try to keep chipping away. If all of a sudden things aren't working, I got to make more money now because I've got more of this or more of that.
Right.
That's a hard life to live. If all of a sudden you're trading and everything you have to do comes out of that day or that week or that month, man, that's a tall order.
It's very, very tall order.
And hits you psychologically as well.
Yeah, absolutely.
You just can't operate that way. So how do you stay in business? So that's why I look to guys and say, what do you do? They're like, don't get crazy. I've pissed away so much money. I don't even want to talk about it, how much I've done that are poor decisions. And then you learn. And I think it's going to be very personal to each and every person.
For sure. I feel like I've been studying this idea of wealth building for a long time. And even as I've made more money in the last couple of years, still making decisions that I've backed out of. Recently, one of the things, Riley and I were spending a bunch of money in life insurance, and it could be a great investment. It could have been, but if you look at the return on me putting 24 grand each of us a year into life insurance versus if I would have just put it into an index fund, I would have made more money. So just another, like you said, as you make more money, you get more experience, but it has to be personal. It's a great way to say, because you could read every book, get every lesson from every person, and it's still going to be your personal story. I have a quick question for you, because this is a little bit about what we've talked about before. There's a comment, and this came up often, Anthony, when I asked on Instagram and Twitter what people wanted to know. Because of your backing and your history, people wanted to know your opinion on stop hunts, smart money concepts, and the buzzwords of institutional trading. Can you speak on that a little bit?
Well, everyone knows where the stops are. I mean,
everybody knows where the stops are.
I don't know why that, when people say, oh, they're just going after stops. Well, of course they are.
Right.
When they say they, who's they? Well, it's the traders that are aggressively trading in that direction.
Exactly.
I try to push them to stops too. You know how many times I would try and sell a bid or offer to try to move it closer to a stop to run my order further, especially if I have a winner on that's towards a stop. Of course I would do that.
Of course. Right.
And there's nothing worse than, me buying a big package right at a double top, thinking it's going to take it out by a couple of ticks, and it runs right against you. Then you puke it, and then it takes it out.
Of course.
I look at that stuff and go, it's out of my control.
Right. That's exactly what I say.
What does it matter?
Right.
If you know where the stops are, well, then that's if someone says to me, oh, they're on a stop hunt, they're going for the stops. Well, then be a part of it if you think it's so right. What do you want from me?
Right. Did you trade through the period in 2008 when people were doing that spoofing thing all the time? Were you a part of that?
So spoofing is an interesting thing because, spoofing is, I'm not sure, maybe some people may not even know what it is. It's showing that you're going to do a bunch of orders or a bunch at one price, and then you pull it and you go the other way.
Right.
I will tell you this from a personal, big market maker in the S&P.
Yeah. What do you got?
A lot of times I'm going to put 500 on the offer, and all of a sudden I look and I don't want them anymore and I want to be long. I'm going to pull the 500 and I'll buy 200 or 100. But what they were doing, it was stacking the order book, and I know they're doing it to a great level of it. But I will tell you this, there's every big trader out there. You're going to show a big order of size when you want to go in any direction, and this goes for independent traders too.
Sure.
And if you don't want them anymore, they don't look good, you're going to pull them. Now, right. I know that they were doing it for a bad...
Sure, they were pumping in a direction.
I understand that.
Yeah.
And I get why that, but I just wanted people to understand that, like, that originates from big traders always are going to try and show size going into any area. This is why I don't really look at the trading book that much anymore, because it's not what's really even there. I mean, how many times you guys bought a stock or did something and you look even at an option and you go to put a decent size order in the middle of it and it's filled and you never even saw it.
Right. So
I never look at that stuff because there's so much liquidity out there in these markets that when somebody's trying to be bigger or in that area, it's irrelevant to me. So when I was trading during that 08 time, during the spoofing, I'd see a 500 lot up there, I'd buy it from them. And sometimes it would work and sometimes it wouldn't.
Right.
And, it's a battle of it. So, and they've done such a great job at getting
cracking down on that. Right.
Percentage of it.
Right.
So,
but look at that. That's a variable in a market condition that presented at a certain time because of whatever those people were doing at that moment. And that made markets different. So you have to think about that sometimes, just to think about, like, well, what's going on today that's making markets a little bit, why is this bear market a little bit more unique? You know what I mean? Kind of like what we talked about earlier in the conversation.
Why do I think this bear market is different?
Yeah.
Well, I think it's because you go from QE to QT.
Right. So it's different versus printing the money versus, right.
Who's going to make a market? Let me tell you this. So I could make a big market.
Yeah.
Do I want to?
No.
When people say, oh, look at the markets just getting crushed, there's no liquidity. You make a market in this.
Right.
I don't want to make a big market in the NASDAQ or the S&P right now.
Good point.
I buy or sell at the time where I want to. And if it goes my way, I might add, but I'm adding with momentum.
Sure.
I'm not going to just make a market when the market's getting tanked. People are going, oh, it's only there when you need it. Well, that you can say that about anything.
Anything. Right.
Anything. Because at those times, I'm more likely to make a market.
Sure.
Because I can get out.
Right.
Think about it from the bigger trader perspective. If I can't get out in 1 second after I am getting in, if I show a big order, then I better not show that big order.
Exactly. Yeah, exactly. What do you think about crypto? I know you mentioned you were doing spot and futures on ETH. What do you think about it in general of, like, I mean, right now, Bitcoin's at 23,000. People are wondering, is this going lower? Are you a long-term crypto believer? Do you think, are you deep in that? You got an NFT wallet, Anthony? What's up?
No, I actually do. I owned several NFTs. I don't know.
Nice. Good.
Luckily, I sold them.
Good.
I owned a bunch of Zed.run horses.
Nice. Yeah. We were talking about this, the horse racing thing on the.
Yeah, I remember this.
Crazy.
I bought Z1 Nakamoto Genesis is right when it kind of not too early in it, but I bought them. You know, at the end, I kind of just burned out of all of them. I didn't really make a lot of money. I didn't really lose a lot of money. I lost on some, made on some. But
Sure.
what do I think about crypto?
Yeah.
It's not going anywhere.
No.
I just think it's easy to say now that it was just way overvalued, but you know, I don't know what else to say. I mean, I look at it and say it's not going anywhere.
Yep.
But you've got too many of them, and they're all too tied to Bitcoin and Ethereum. I think that's the biggest issue with crypto.
Sure.
Is that if Bitcoin and Ethereum go down and everybody goes down with them,
yeah,
then why not just trade Bitcoin and Ethereum? Because you're in a sense where if you can't separate yourself as a coin from them,
what are you?
What are you?
Right. A subsidiary of Bitcoin, basically. But now let me ask you this. This goes good. That's a great point, but this goes together with it. With Bitcoin being so tied to the indices right now, you look at NASDAQ and Bitcoin, and they are almost spot on sometimes. Is NASDAQ leading Bitcoin, or is Bitcoin lead? It's got to be NASDAQ leading Bitcoin, right?
I'm so glad you asked me this, because this is a big pet peeve of mine. And it is just because a chart correlates with another chart
doesn't mean they're related.
Doesn't mean they're related.
Really? So you don't.
And I want to tell you this, and I know that the people will say, Anthony, he's a dumbass. They correlated. If you show me a chart and it's correlated, I can show you so many charts. If I overlay them, I can tell you that.
Great point.
Anything is correlated with anything, and that doesn't mean that they're correlated.
Sure.
As a trader, I look at it like this.
Okay.
The reason why they're moving together, the reason why gold can't rally, the reason why oil is down today, is because when you own something that's losing value, you sell something else to cover that loss. Period. If I own NASDAQ and I'm losing my ass in my 401k or my trading, and I own Bitcoin, I have a weak hand in Bitcoin, because either I take a beating in both, or I cover the other one and I maybe hold this one, or I raise capital to wait to see what happens. So you have risk asset correlation. Because think about it from this way. I own a bunch of stuff. I have gold. I don't have Bitcoin and Ethereum right now, but I own a bunch of different things. When all of a sudden the market is all going down, I look around and go, what do I want to get rid of? What do I need to do to raise money? Because at some point I can't buy back in unless I cover something. And if everything's getting cheaper, I have to cover the one that has the most risk, and that's Bitcoin.
Sure. No,
so that's all it is. I don't think that there's any sort of change in the Bitcoin environment. If anything, I think it's gotten better.
Right.
I think it's used more, and I am a believer in it. But you can't own a ton of Bitcoin if you're getting killed in the market. It's just, it's hard to do it. That's why it goes down. So it's not that they're necessarily correlated because the NASDAQ tech stocks are going down that's weighing on Bitcoin. It's a matter of, what do I have as a trader? What do I look at my portfolio and say, you know how many friends I have that own stocks that are going, I bought this Bitcoin and Ethereum, I'm losing my ass in it now. What am I going to do with it? They're dumping it.
They're dumping. They're dumping. It's a great point.
They're not selling it because it no longer has the same reason to own it.
Sure.
They just had a weak hand in owning it from the beginning.
Right. Yeah. Yeah. And I mean, look, you went through, you've seen bull and bear, but to go from 70K to 23K, people bought it 70K, people bought it 60K, and now it's 23. Sure. A lot of people are going to have weak hands at 23 when we were at 60 about a year and a half, 2 years ago, not even, right?
I mean, I just look at Bitcoin and say, this is why I also believe I don't like the correlation aspect of it, because you have to look at Bitcoin and say, why do I own Bitcoin?
Totally different reason why you own stocks.
People are buying Bitcoin, a lot of these people, because there's price speculation only. Right. That is what drove the price. No one can tell me that it's because there's only 21 million and there's not going to be enough Bitcoin for everybody, so we have to buy it before it's at 100,000. Nobody of the majority of people thought that way. Right. They bought Bitcoin because they thought they'd make money in it. That's the only reason.
That is it.
Don't lie to me and tell me you bought it because you want to be part of the supply and you want to have Bitcoin in case we go into some sort of world war situation where you're going to be swapping Bitcoin with people.
Right. Literally. That's what some people,
That's all they did.
Yeah,
So all this price speculators are going to get bleeded out. I'm
Yep.
one of them. I've done it. I didn't buy Bitcoin because I knew I was going to use it. ETH, I did. I still have some ETH because I use ETH.
Okay. But
Different
ETH has a
thing.
lot more use in the digital world almost than Bitcoin from an outsider's perspective. We're using it for NFTs. We're using it for smart contracts. Like it is a lot different utility. I want to change gears before as we wrap up here, Anthony, because I know we got a hard stop. This topic right now is super hot in our world of people getting larger capital, getting funded. James is a guy who's been funded for a long time. You mentioned that you've backed traders before, funding them, giving them more capital. If you were a younger guy, and I am 27, just so you know, you mentioned earlier, you didn't know. I know the beard makes me look a little older, but I'm 27. So if you were a younger guy like us, and not that we're too far in age, I'm almost 30, like shit, but would you look to start your own fund? If you have a track record of 3 or 5 years of good performance as a day trader, would you go around? Because I mean, like you've seen my following, people like family, friends, strangers. Hey, can I give you 100 grand? Can I give you 10 grand? And I always say no. I've never taken money from people because I've always been able to either raise my own or now with these funding companies, get capital that way. So would you go and try to use these other like prop firm style funding companies, or would you go and start your own fund, raising your own money and writing your own rules?
Oh, well, I mean, I would never take family money to trade.
Never.
Especially to start.
Me neither. I've always been afraid of that.
I would say just no friend or family money to trade is like, no way.
Yeah.
What I like about I think that the funding side of things is interesting because number one, I think it depends on how you get funded. I find that I hear back from a lot of people to say that some of these funding situations are just, they're too difficult and they're charging you X amounts of money per month. I don't know what the numbers are.
Yeah.
And I never get funded, or if I get funded and then all of a sudden I hear some stories recently that like, they're not getting their full pay or blah, blah, blah. Right. And they're businesses.
Sure.
And I could tell you from back in traders, if they don't charge that money, and I didn't charge the traders I back because I didn't have a business, but it's a losing business most of the time. So they make money by getting the monthlies. And I think everybody can understand that. So they're going to make it extremely difficult. But what it teaches you, and I think personally, with the funding side of things, it's a small expense of education to see how you're looked at through those funding people's eyes. I think it's a great way to be, because your risk is your risk is fixed. I don't believe that a new trader, I don't care what they say, there is no fixed amount of risk. They will risk it all, because once it starts getting bad, they're going
all in. Yep.
They're going all in.
They're going all in. Full play.
They will be great risk managers at the beginning. And once it doesn't work out, they will be the worst risk managers you've ever seen.
As the losses increase, the probability of that increases tenfold. Right.
Exactly. So why not go with them and build some structure?
Yeah.
Then I think if it doesn't work out for you, I've gotten a lot of messages about this on Twitter. Open up a micro account, trade the really small products, get a job until you can do it. I delivered pizzas. I worked for UPS. I worked on the trading floor. Where's your commitment level? If you think that you're going to just turn on the machine and be able to make money, that's just not reality.
Yeah.
So exist long enough. It goes back to why I said my mentors are sustaining success.
Yep.
What can I do to stay in this business? It's what I do when I'm not in this business always, because I have to be able to walk away at a time when I'm in a position of strength.
Yeah.
If you can't do that, you will never make money in trading.
Yep.
If you can't walk away because you're in a position of weakness, you need to make rent, you need to make food, you're toast.
Toast. Yep.
So I look at it like this, the funding question to me is like, why wouldn't you do it?
Right.
Do what you have to do to exist.
Yep.
Because that will teach you structure and true discipline, not just discipline to a strategy, discipline in life.
But what a time, you're spot on. Great answer. And what a time to be a trader, right? I mean, from someone like you, even for myself, when I got into trading, one of the main prop firms was the one. It was just one. And everyone that I talked to was like, no way it's legit. No way it's legit. Now, 6 years, 7 years later, they're still here. They're still number one, and other ones have popped up. And I think if you look at that, even in just my progression, and then of course I think about yours, it's never been easier now, in my opinion, just a different perspective, to get that capital, to get that funding. Now, is some of the targets are like 8% to 10% in 30 days. You do need to change up your risk approach, your risk strategy to do that. But if people have done it, does that make it impossible? No. So I think that there's a perspective that, losers take sometimes, not to call those people losers that say negative things about companies. They could be receiving a negative experience. But from my perspective, the people that are first to talk shit, they're normally the ones that either broke a rule and want to try to get out of it. You know what I mean? They didn't follow the structure properly. And James is, I mean, coming off his biggest, right, James, this has been your biggest month of payouts ever.
Yeah.
Nice.
Yeah.
15K, something like that. So it's been a really good month for James. So I think there's both sides of it, but I was just curious your perspective on that. But listen, Anthony, this has been amazing. I think we've covered so many different perspectives. We talked about overcoming failures, overcoming losses, bouncing back from setbacks. We talked about your mentors. We talked about crypto, fun, everything. I can't thank you enough, man. And I think people hopefully will listen all the way through. Drop a comment if you did. If you'd like us, to bring Anthony back for a part 2. If you have some specific questions you want more context on, put those in the comments. We'd be more than happy to convince Anthony if we have to bring him back on. And, Anthony, listen, we're going to hold you to this. Since you did this for us, we're going to take you out and go golfing once we get James over from South Africa. We're coming down.
100%.
Oh, nice.
We just need a 4th guy, and then we got our Sunday. All right.
Yeah, we got a full ball.
So listen, everybody, AnthonyCrudele.com, at Anthony Crudele on Instagram and on Twitter. I know Twitter is like his main thing, right, Anthony? Like you're the guy on Twitter now. You've been doing great with the reels. You've been doing great with the videos. I love it.
Yeah, guys, all I can say is thank you so much. Big fans of what you guys do. And anybody out there, my DMs are open. Hit me up anytime. And like I said, I wish you guys all the best in your trading careers, man.
Thanks, Anthony. James, thank you as always, brother. And we'll see everybody in the next episode.